If you walk into pretty much any estate agency across the country, make it clear that you're a property investor and ask to see their finest investment property deals, I can pretty much guarantee you they'll put some properties in front of you and start to quote you a percentage return that they feel that property will actually give you. This is called yield. Let me tell you what it is and why it's completely the wrong set of numbers for you to be focusing on. Hi there, my name is Tony Law from Your First 4 Houses, and my channel is all about helping you get to investment property number 4 as quickly and as painlessly as possible. So as I say, you're in your local estate agent. They've started to put some properties in front of you. They're thinking, well, you're a property investor, you're going to want to know what the yield is. So let's start things off by looking at that actual equation. So yield is the annual rent, usually based on just a single family unit renting the property, divided by the purchase price, multiplied by 100. And it's the yield, that the estate agent is actually going to be quoting you. So let's just pause for a minute and have a quick look at this equation. The annual rent, generally speaking, it's going to be based on a single family unit renting the property. And in truth, there's not a huge amount that you can do to actually vary that amount of income that's coming in. There are a few things that you could do, but not a huge amount to vary that particular number. Let's look below the line at the purchase price. Well, the purchase price is the purchase price. That's what you're buying it for. Again, there's not really anything that you can do to actually change that. Consequently, if you get 4 terraced houses, for example, in a row, let's imagine we've got 3-bedroom houses, 2 reception rooms. If you look at the yield that you're going to get on those, they're all generally going to be about the same. In the example that I've given you here, they're say 5%. Now, property investors, people that are actually doing this professionally, use a whole different set of calculations. They use return on investment. Now let's look at what that equation looks like. So we're going to take the annual profit, we're going to divide that by the cash that we've invested in the deal. We multiply that by 100, and again that gives us our return on investment. So again, let's just pause for a minute and let's just have a little look above and below the line. So let's start off with the annual profit. Well, what does that look like, or what is it made up of? It's made up of the annual rent that's actually coming in, take away the annual costs that are going out. So the annual rent that's coming in, is there actually anything specific that we can do to actually vary that? Well, the answer is absolutely yes, there is. You might choose to multi-let the property. You might use an LHA strategy. You might split the property up in some way to increase and boost the income. You might change it from commercial to residential, or vice versa. There's a whole bunch of different things that you could do to change the level of income that's coming in. The costs going out, is there anything that we can do to change that? Absolutely yes, there is. You might have a mortgage with a sizable deposit, meaning that your monthly costs going out mortgage wise are less. You might have a very small deposit with a larger mortgage going out. You might have a number of different bills that you're going to factor into this. Frankly, the costs going out can vary enormously depending on what you're actually doing with the property. So let's look below the line now. Let's look at the cash that we're invested in the deal. So that's actually going to include the initial cash that you're going to invest, plus any refurbishment costs that you're going to actually put into the property. So the initial cash that you're going to invest in this particular property, can that vary? Absolutely it can. You might decide to put 100% of your own funds into buying this particular property. You might actually use an investor's money to fund this particular project, and in theory have none of your own money in the actual deal. Now obviously that's going to change a number of other parts of the equation, but it's a fact that can vary dramatically. Or obviously somewhere in between. You might have a high mortgage, a low mortgage, so that is absolutely going to change. Your refurbishment costs, can they change? Of course they can. Depending on what you're actually going to do with the property, they can vary wildly, especially if you're going to change the class use, for example. So all 4 parts to this can dramatically change depending on what you're actually doing with the place. So if we take those same 4 properties, it's absolutely the case that you can get a 5% return. You could get a 50% return on the house next door. You might get 0 on the one after that. Or if you've got none of your own funds in the property deal at all, it's absolutely possible that you could get an infinite return on your money. And if I look at some of the properties that I've got, in the right hand column under return on investment, it absolutely says infinite as a return on my investment. So please, 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 the next time you're looking at a number of different projects and you're trying to decide which one to go for, please ignore yield if you can. Take the extra effort that it's actually going to take to calculate a genuine return on your investment, and then please base your decisions, or at least make one of the components to your decision, the return on the investment. I really hope that you found that helpful. I really do. This return on investment calculation is something that is so dear to my heart, and I genuinely think that a lot of property investors don't use this when they're just trying to decide what to buy. If you found that helpful, I would love it if you could take a moment to subscribe to my YouTube channel. If Facebook is more your thing, please take a moment to like my Facebook page. And this way I can keep you up to date when the next property related video is available to you, because all I want to do is to help you on your property investing journey. My name is Tony Law from Your First 4 Houses. I really hope that you found this one helpful, and I look forward to seeing you next time. Thank you.